In a pivotal week for central banks, major financial institutions, including the U.S. Federal Reserve, European Central Bank, ECB, Bank of England, Swiss National Bank, and Norway's Norges Bank, are set to make their final rate decisions of the year. The week begins with the U.S. Federal Reserve on Wednesday, followed by a Super Thursday featuring multiple European central banks. While the general expectation is for most central banks to maintain current interest rates, Norway's central bank has signaled a likely increase in the cost of borrowing in December. Investors are closely watching for any hints in the central bank's statements regarding potential rate cuts in early 2024, especially as inflation has been moving away from its peak in recent months. The divergence between market expectations and the cautious stance of central banks, particularly the Federal Reserve, poses a credibility challenge. Market participants anticipate the Fed to keep rates at 5.25% to 5.50%, with traders pricing in a 25 basis point cut as early as March next year, according to the CME FedWatch tool. However, Fed Chairman Jerome Powell has pushed back on expectations for aggressive rate reductions, emphasizing the need for a measured approach. This incongruity raises questions about the credibility of both market sentiment and Powell's commentary, with market participants seemingly at odds with the central bank. Powell highlights that current policy is well into restrictive territory, emphasizing the delicate balance between doing too much or too little. The U.S. labor market's ongoing strength, evidenced by November's better-than-expected non-farm payrolls, adds complexity to the policy outlook. Shifting focus to the ECB, it grapples with a significant drop in Eurozone inflation, from 10% last year to 2.4% in November. Investor expectations for early 2024 rate cuts intensify as inflation approaches the ECB's 2% target. Deutsche Bank economists anticipate an April rate cut, citing recent inflation data and official commentary deviating from the consensus favoring June. In summary, upcoming central bank decisions not only shape immediate monetary policy but also test market credibility. The disparity between market expectations and central bank caution adds uncertainty, influencing market dynamics and investor sentiment in the coming months.